What's up, millennials? This is Phil with Millennial Money Gains, and welcome back to a brand new video. In today's video, we are going to go over a dividend stock that has been kind of having a little rough patch lately, and I like to refer to this one as the IBM of healthcare, and you guys will see exactly why I refer to it this way. And we're going to look into it and see if we can buy this company, see if there's any potential growth for this company, or if this one is just a beat to the curb and never buy again. But if you guys are hyped for this video and are hyped to see this dividend stock, I would like to offer a little test here. If you guys can just pause the video and tell me which dividend stock you think this is, just write it down in the comments below before we hop into it. I would really love to see all your answers and have you guys guess which one it is. But if you guys are hyped for this video, please make sure you smash that like button. Also, if you want to join the family, we are growing here on a daily basis, so please make sure you subscribe to the channel. Post here every Sunday and every Tuesday, so make sure you guys are subscribed so you get those notifications. And the stock we are going to be talking about today is Gilead Sciences. Ticker symbol is GILD. It's down just about almost 5% on the year or so. In the past 6 months, it's down about 8.5%. So we're going to hop right in and go over exactly what Gilead is, what they do. We're going to hop into their dividend and their financials. So, Gilead Sciences, they are a biopharmaceutical company which engages in the research, development, and commercialization of medicine in areas of unmet medical need. The firm's primary areas of focus include human immunodeficiency virus, which is also known as HIV, acquired immunodeficiency syndrome, which is AIDS, liver diseases, hematology, oncology, and inflammation and respiratory diseases. It offers antiviral products under Harvoni, Genovia, Epclusa, Truvada, Atripla, Descovy, Stribbled, Viride, Odyssey, Complera, Sovaldi, and Vosevi brands. The company was founded by Michael L. Reardon on June 22nd, 1987, and is headquartered in Forest City, California. So, they are a pharmaceutical company that creates medicines for different categories such as HIV and AIDS, to just sum that up. But let's hop right into their dividend. They do offer a pretty healthy dividend, so we're going to hop right into it here. Right now, their dividend yield is 4.72%, so that is pretty good. They do have a very modest payout ratio of 38.96%, with a 5-year dividend growth rate of 8.18%, with dividend growth for the past 6 years. So they do pay this dividend on a quarterly basis at 73 cents per share. So getting a starting yield at 4.72% is really solid, almost a 5% yield for a company like this. And their payout ratio is pretty small, so there's definitely room to grow it. The 5-year dividend growth rate is nowhere to brag about, 8.18%, but it is still pretty solid to have your money compound like that. And the dividend growth for only 6 years is not something that I'm too happy about. But so far, the dividend stats, that is a check mark for me. They look pretty solid, and they look like they have room to grow, even already offering almost a 5% dividend yield. So we're going to get into dividend safety here and just see what Seeking Alpha thinks of their dividend. So the dividend safety is rated a C relative to the sector because they are paying out 33.36% of cash, when the sector median is just about 27.3%. So dividend safety grade gets a C for Seeking Alpha. Now let's hop right into their valuation. Currently, they are valued at A, with a PE ratio of 8.49 and a forward PE of 9.5, with a sector median is about 22.2. So it is a down about, it's a difference of 61%, almost 62% compared to the rest of the sector. So let's go right into their financials and take a look at their income. So December of 2017, they did have $26 billion in revenue. 2018, it dropped to $22 billion in revenue. 2019, $22 billion in revenue. 2020, almost $25 billion in revenue. And 2021, $27 billion in revenue. So not that much growth there. It did drop a little bit. So this is why I call it the IBM of the healthcare industry, because their revenues are not growing at a steady rate. As you can tell here, their revenue in 2017 outpaced their revenues in 2018, 2019, and 2020, and they barely beat it for 2021. So that is why I am a little bit skeptical on this company, just because in terms of their financials. Let's take a look at their balance sheet. So they currently have about $5.3 billion cash and cash equivalents on hand. Not too bad there. The long-term debt currently of about $25 billion, which is a pretty decent amount. Maybe not for a company of this size and a company of pulling in this much revenue. Maybe it's not that much, but still a little bit more than I like to see when I'm investing in different companies. They have total shares outstanding of 1.254 billion, which is down slightly from their records of 2018, which was 1.31 billion. So they are buying back some shares at a very slow rate, but they are doing that. So that even though it's at a very slow rate, that still gets a check mark for me. Now, let's take a look at their cash flow. Cash is king, right? If they're not getting any cash flow, then they're not making any money. So, December of 2017, they have $4.6 billion in net income. And in December of 2021, they have $6.2 billion in net income. So, that is rising. Does look like it's rising on a consistent basis. So, pretty decent there. I would like to see it rise a bit more. It's definitely not at where I think this company could be with the medicines that they have. Truvada to me is a big name. See commercials for Truvada all the time, and I think that they can get these medicines to supply them more with some of that money. So personally, I do think that this could be a decent investment at these prices. I wouldn't pay more than $65 a share for this stock. But if you are looking to get into the health and care industry or the pharmaceutical industry, then Gilead Sciences could be a name on your list. At these prices, it's hard to go wrong because it is pretty much almost at the cheapest it's been in the past 5 years or so. It was just one other time it was this cheap in the past 5 years. So for me, I'm not going to be investing in this one anytime soon because I'd rather build the positions I already have in my portfolio rather than invest in a company like Gilead, just because I am not too fond of the company itself. Their revenues aren't growing much at all, which is what I like to see in companies that I am investing in. But this could be one that you can keep on your radar, or if you want to look further into it, then please be my guest. Let me know what you guys think about this company. If any of you are investing, that almost 5% dividend yield starting, it looks pretty attractive. So that is the one thing that's kind of swaying me a little bit. But I'm going to hold off on it for now. If I could get it, if it falls below, $55 a share, I will probably be more excited about it. But until then, I will be holding off. If you guys did like this video, please make sure you smash that like button. It really does help out the channel, and I really do appreciate it. Also, check out the links in the description for anything stock related. You can get some free stocks or free Bitcoin, free crypto, whatever you want. Check the links down below. It helps out the channel. It helps you out. It's a win-win for everyone. Also, make sure you guys are subscribed to the channel. I post here at least every Sunday and Tuesday. I appreciate you all for watching. Check out any videos that you see here, displayed here right on top of me. If you guys are interested, check out my other videos on stock analysis. We do talk about dividends all the time, so make sure you guys are staying up to date on those. I appreciate you all for watching, and I'll see you in the next one. Peace.